Stop right there before you file that LLC paperwork. I know what you're thinking. Every business guru on the internet is telling you to form an LLC immediately, right? Well, I'm about to save you from making a potentially costly mistake that could actually hurt your business more than help it. Today, I'm going to share the uncomfortable truth about LLCs that nobody wants to tell you. And trust me, by the end of this video, you'll have a completely different perspective on when and why you should actually form one. So buckle up, because we're diving deep into the dark side of limited liability companies. First, let's talk about the biggest lie being spread about LLCs. Everyone's telling you that forming an LLC will magically protect all your personal assets from business lawsuits. But here's what they're not telling you. This protection has more holes than Swiss cheese, and in many cases, it's completely worthless. The reality is that LLC protection only works in very specific circumstances. If you're a service-based business owner, consultant, or freelancer, you can still be held personally liable for your own professional negligence or malpractice. That LLC isn't going to save you if you mess up a client's project or give bad advice that costs them money. Even worse, if you don't maintain proper corporate formalities, and most small business owners don't, courts can pierce through your LLC veil faster than you can say limited liability. This means they can go after your personal assets anyway, making your LLC protection completely meaningless. But the asset protection myth is just the tip of the iceberg. Let's talk about the hidden costs that nobody mentions when they're trying to sell you on forming an LLC. Sure, the initial filing fee might seem reasonable, maybe $100 to $300 depending on your state, but that's just the beginning. Many states charge annual fees that can range from $50 to over $800 per year. California, for example, charges an $800 annual franchise tax, regardless of whether your LLC makes any money. Then there are the ongoing compliance requirements. You'll need to file annual reports, maintain separate business bank accounts, keep detailed records of business meetings even if you're the only member, and potentially deal with publication requirements in some states that can cost thousands of dollars. Don't forget about the professional fees either. You'll likely need an attorney to draft your operating agreement properly, an accountant to handle the more complex tax filings, and potentially a registered agent service if you don't want your home address publicly listed. Speaking of taxes, this is where things get really messy. Contrary to popular belief, forming an LLC doesn't automatically save you money on taxes. In fact, it can make your tax situation significantly more complicated and expensive. By default, single-member LLCs are treated as sole proprietorships for tax purposes, which means you're still paying self-employment taxes on all your business income. Multi-member LLCs are treated as partnerships, which requires filing additional tax returns and can create phantom income situations where you owe taxes on money you never actually received. If you elect S-Corp taxation for your LLC, you'll need to run payroll for yourself, file quarterly payroll tax returns, and deal with reasonable salary requirements that can trigger IRS audits if you get them wrong. The administrative burden alone can eat up any potential tax savings. Here's another shocking reality. Having an LLC can actually make it harder to get business credit and funding. Many lenders and credit card companies view LLCs as riskier than sole proprietorships or corporations. You might find yourself having to personally guarantee business loans anyway, which completely defeats the purpose of having limited liability protection. Banks often require extensive documentation from LLC members, including operating agreements, certificates of good standing, and member resolutions just to open a simple business checking account. This bureaucratic nightmare can delay your ability to start operating and generating revenue. Now let's address the complexity factor that nobody talks about. Running an LLC properly requires you to treat it as a completely separate legal entity from yourself. This means separate bank accounts, detailed bookkeeping, formal documentation of all business decisions, and maintaining an arm's-length relationship with your own company. Most solo entrepreneurs and small business owners aren't prepared for this level of administrative overhead. They end up commingling personal and business expenses, failing to document important decisions, and essentially operating as if the LLC doesn't exist. This careless behavior is exactly what courts look for when deciding whether to pierce the corporate veil. The marketing and credibility argument for LLCs is largely overblown too. While having LLC after your business name might make you feel more professional, most customers don't care about your business structure. They care about the quality of your products or services and whether you can solve their problems. In many industries, being a sole proprietor or operating under a DBA can actually make you seem more approachable and personal. Some clients prefer working with individuals rather than companies because they want that direct personal touch. Here's a scenario that might apply to you. You're just starting out, testing your business idea, and not sure if it's going to work long term. Forming an LLC at this stage is premature and potentially wasteful. You're adding unnecessary complexity and costs to an already challenging situation. Instead, start as a sole proprietor. Get your business off the ground, validate your concept, and generate some revenue. Once you have a proven business model and are making consistent income, then you can evaluate whether the benefits of an LLC outweigh the costs and complexity. The timing consideration is crucial because changing from sole proprietor to LLC later is relatively straightforward, but dissolving an LLC that you formed too early can be complicated and expensive. You might need to file dissolution paperwork, pay additional fees, and deal with tax implications. Let me share some specific situations where forming an LLC is almost never worth it. If you're a freelance writer, graphic designer, consultant, or coach just starting out with minimal revenue, the costs and complexity far outweigh any benefits. The same applies if you're running a side business while maintaining a full-time job and aren't sure about your long-term commitment. If your business involves minimal liability risk, like selling digital products online or providing low-risk services, the asset protection benefits are probably not worth the administrative burden. Your money might be better spent on business insurance, which provides more comprehensive protection anyway. Here's what the LLC formation industry doesn't want you to know. Professional liability insurance is often more effective and affordable than LLC protection. A good business insurance policy can cover you for professional errors, general liability, and even some personal asset protection, all for a fraction of what you'll spend maintaining an LLC over time. Consider this alternative approach. Start as a sole proprietor, invest in appropriate business insurance, maintain good business practices, and save the money you would have spent on LLC formation and maintenance. Put those funds toward marketing, product development, or building an emergency fund for your business. If you do decide to form an LLC later, you'll be in a better financial position to handle the ongoing costs and administrative requirements properly. You'll also have a clearer understanding of your actual liability risks and whether the protection is worth the investment. The bottom line is that LLCs aren't automatically better than other business structures, despite what every online business course tries to tell you. They're tools that serve specific purposes in particular situations, but they come with real costs and complications that many entrepreneurs aren't prepared for. Before you rush into forming an LLC, honestly evaluate your specific situation. Consider your actual liability risks, current revenue level, long-term business goals, and ability to maintain proper corporate formalities. For many new entrepreneurs, the answer will be to wait and focus on building a successful business first. Remember, you can always form an LLC later when it makes financial and strategic sense. But once you form one, you're committed to the ongoing costs and administrative requirements whether your business succeeds or fails. Don't let the fear-mongering about lawsuits push you into making a premature decision. Focus on providing excellent service, maintaining proper insurance coverage, and building a solid business foundation. Those fundamentals will serve you far better than any legal structure ever could. If this video opened your eyes to the realities of LLC formation, make sure to subscribe for more honest business advice that cuts through the hype and gives you the truth you need to make smart decisions for your entrepreneurial journey.